I'm Louis Spiker. I'm a partner with Johnson May in Boise, Idaho, and this is the first video in our So You Want to Buy a Business in Idaho series. We're going to take a dive into what buyers are looking for, the different ways in which businesses can be purchased, and some of the considerations that we think that it's important for you to think about when you want to enter into a transaction. It doesn't matter if you want to buy something as small as a two-man lawn care business, or if you wanted to step into something that has annual sales of $10 million a year. There's common characteristics to these sales and the concerns that buyers have. What we're going to talk about today are some pretty broad topics, and that's with regard to how you structure one of these sales. Generally, you're looking at either purchasing the equity in the business, so that's the membership interest in a limited liability company, or the stock in a corporation. As always, this video is general information and is not individual legal advice. We're happy to meet with you to discuss your concerns. We're a full-service civil law firm located in Boise, but we practice statewide. The primary difference, or the primary focus of when you're making the decision as to whether you want to buy that membership interest or that stock, or if you just want to buy the assets, really comes down to liability. And what I mean by that is when you buy someone's equity in the business, all of the existing liabilities remain with that business. It's an ongoing concern. The entity still exists, and claims that could be made before you're involved can still be made against the business. The only difference is now you're the owner and you have to deal with those claims. Maybe you've negotiated such a purchase price that those concerns are worth it to you. And those are things that you have to think about. It's an individualized decision, and it really is part of the negotiating process. The other consideration, in addition to the liability that either you're assuming when you purchase a business, would be the tax treatment. Buyers generally prefer an asset purchase. Sellers generally prefer to sell the equity. And this really has to do with how the gain is associated with these assets. A seller is generally going to have depreciated those assets down, so they're going to have more gain based on the price that's in there and a greater tax liability, where they may not have the same amount of gain if they're selling the equity interest. Buyers really want to step up the basis in the assets they purchase so they have the ability to depreciate that down in the future. Going back to the liabilities and why that matters, let me give you an example. Let's say that you've purchased a small manufacturing facility. Single line, decent amount of revenue, but you've got 20 employees. And one of those is a shift manager that's been sexually harassing their subordinates. It doesn't matter that this occurred 3 months before you purchased the business, or that you fired this person immediately upon hiring. You didn't know about these claims, you just didn't like the person, or they weren't performing. What matters is that they were an employee of the same business that you purchased the equity in. So the claims of those subordinates can be brought against the company, the one that you just bought. Where if you would have purchased the assets instead, which comes with the technicality of all of the employees are fired and then generally they're rehired by the new entity or an existing entity that you control that steps in and buys these assets. And that can be vehicles, equipment, the customer list, the existing contracts that that business has. All of those things can be purchased. The other side of that is that you get to pick the liabilities that you are choosing to assume. There may be contracts that have the return on investment that you want to maintain, but you have the liabilities associated with that you actually have to perform under those contracts. But the potential liabilities that existed at the time you bought that equity interest, those remain with that entity. There are some exceptions, and those are primarily environmental liabilities, which is why that it's important to have an appropriate due diligence investigation. It's not just important, but that's essential. We intend to cover that in a later video in the series on the questions that buyers should be asking. When we look at the choice between an asset purchase or buying the equity in a business, like we've talked about, buyers generally prefer an asset purchase. But there are situations where purchasing equity may be desired. And Primarily, those are situations where the business has existing contracts or licenses or permits or some other reason that that entity needs to continue to exist. The price that you negotiate for purchasing that business or the equity of that business may be different, and frankly probably should be different than if you were purchasing the assets of the business. There's not a one-size-fits-all choice with regard to the type of transaction, but what we like to do for our clients is help them evaluate the risks and the potential opportunities that are associated with either an equity purchase or, again, just purchasing those assets. As we talked about earlier, you may have some stiff resistance from a seller who really just wants to be done with it and sell the equity, where we don't have to worry about rewriting contracts or the seller's concerned that there's a holdback on performance that's associated with these contracts going forward. Because when you purchase the assets, the new entity either has to assume contracts, which requires the consent of that business's customers, or it has to rewrite those contracts. And those are additional considerations that you have to address. And it's important to have a team, and when we think of a team, we think of a tax advisor, we think potentially of a business consultant if that's something that you feel that you need, and then someone that can help on the legal side, which is where we come in. If you need assistance with the purchase or the sale of a business in Idaho, please reach out to us to help navigate that transaction. Like I said, this is the first video of what we intend to be a deep dive into the considerations that we think that are important for buyers to have when they are looking to move forward with their next opportunity in life and buy a business.